All right. So, good morning or good afternoon, MMC University. My name is Ernest. Again, I'm going to do another quick video for you guys. This is gonna be more for the people that's studying for the life license. So we're gonna talk about that. So hopefully everybody can have a chance to hear. And I really appreciate everybody who posting comments. And I love reading about your comments. Some people say they passed the exam. It's unbelievable. So congratulations to some of you guys that been posting some comments. And if you have a chance to post, hey, congratulations as well to you. But we're looking forward to continue the session to help you guys out. Let me see if I can get my screen to share. Hopefully I can get that to work for you guys, and you can be able to see my iPad screen. So let me make sure that can work out. All right, I hope you guys can see. But like I said, we're gonna do a special video for you. I love reading about your comments. Some people give the video a thumbs up. I really appreciate that for doing that. So that's how you encourage us to continue those type of videos for you guys. But this is more for the people that's studying for the life license. This is not for the investment license. Maybe some question, maybe might still happening when you go into your next license, but this is more for people that going to get the life license. All right. So let's go ahead. We're gonna do some test question, and I'm gonna also give you a little time so you can get some time to answer, and also give you some times so you can pick which one is the right answer or not, and I'll give you some explanation after that. Okay, I hope that will help some of you guys. The reason I'm doing really this video is because some people was asking, why don't you do some test question with us too? So that's the whole reason I'm putting some test question as well. And if there's something that you really want to see, let us know into the comments below. So at least I think we have some of the people that post comments, you might think we don't really check them. Yes, the team, when I post them, even somebody in the team will take a look at them and let us know what we need to do for you next, because we do take a look at the comments sometimes. All right, so again, let's get to work. All right. So a lot of time, when it comes to taking tests, people kind of scared, but you don't need to be scared taking the exam. It's matter like know what they're asking, okay? Why they're asking the question, the reason you're picking that answer, okay? That's what I'm about to see if I can show you. And everybody was laughing at me too. Hey, I love it. I love it. Some of you say, well, it's too much joke. Oh yeah, I love the jokes. That's the way you got to learn it. You got to make it fun. Learning is fun. Okay, so let me see if I can get this thing to work. Oops. Okay, good. It's working. It works fine. All right, so let's go ahead. Let's read the first question. All of the following are characteristics of group life insurance, except. So all of the following, okay, a characteristic of group life insurance. Now you can see they're talking about group life insurance, and they say all. Okay, so we need to know what's not. Okay, so we're looking for all of them, but there's one that's not. Okay, see, that is that simple. How you got to go. Let's go start with some of them. Say that individual cover under a policy receive a certificate of insurance. Yes, they do. They do receive a certificate of insurance, but they never get the that's not the right answer. Okay, I'm not done yet. They not they don't get that. everybody can see they don't get, they get certificate, but they don't get the master policy. All right, so let's go see the next one. Certificate holder may convert coverage to an individual policy without evidence of insurability. That's absolutely a true statement. That's correct. So far, I hope you already get the answer, because that's why I made them take the time. Hopefully you get the answer by now. It's a premium are determined by age, sex. Not sure about this one. Not sure about this one. Number 4 said amount of coverage is determined by the according to the non-discriminatory. I think this is actually true. There's no discrimination. So as you can see, when taking that exam, if you can do and you learn that stuff, that's how you can also go ahead and answer that question. So you eliminate the one because all those yes, but there's all of them yes. One of them is no. So you can see the correct answer for this one. It's this one, because it's based on the average age in the group, ratio of male and female, but it's not about age, sex. It's the average. It's not determined by individual. This is a no-no. All right. Okay, moving on. Let's go to the next one. Okay, now that's if I know how to get next into this thing here. Okay. Okay, how do I even go to the next question here? Okay, okay. All right, let's go to the next question. I guess I'm gonna have to do it like that. Be patient. It's all about learning. Sometimes it takes some works, and we have to figure, how to get things moving. So let me give you a little time. Take a moment. You can pause the video so you can take which one is the right answer. You can pause it, and I give you 1 minute to answer that. I think you should be good now, right? You should be good now. Let's go ahead to this next question. All right. This one talk about all insurance. An insurance agent, my bad, an insurance agent was born in 1983. That's a key important thing. He obtained his New York license, whatever. In 2014, that's another important thing. When the license will be expired. So this is what this thing talking about. When the license is going to be expired. Okay, did you know the correct answer in this one is A, on the agent odd number of year. Okay. So hopefully you have a chance. It's not in January 1st. Matter of fact, I didn't say they did the birth. So January 1st, I don't know why they come up with that. Every year, the license issue date, I don't know why they come with C neither, because it's every 2 years. Every 2 years in the license. Now, D could be an answer, but it's not correct, because if you have your license, if you're born in the, there's two things you have to know, odd numbers and even number. So that person born in 1983, that's what we call an odd number. So 2 years after that odd number, so 84, no. 85 could be the next odd number. So they have to be the agent odd number, the following odd number, 2 years odd number. And also if the person born on even year, and the 2 years on the even number. Okay. So that's one you have to know. On the agent birth year, odd number year. So that's how you have to know. Somebody born on the even number, so you have to wait 2 years on your even number. So that's mean an even number could be 1982. So 1984, you have to do it. So 2 years. All right, so hopefully that makes sense. All right, let's finish with this one. We'll continue. That's the best way I can do it, like that. So hopefully everybody who's watching, and it will just bear with us. That's how you're gonna do it. It's all about learning. No matter how I put it on the screen, hopefully you can see. That's what's important. Understand the question. Go ahead and check this one. You can pause the video, read it, and do your best guess. I hope you go ahead and you answer the question for this one. So for this one talking about all policy on, a policy owner cancel his life insurance policy, okay, but instructs the insurance company to transfer the cash value to his policy to an annuity. So now you see somebody who have a life insurance wanna exchange it for an annuity. This is a non-taxable transaction because we have a beautiful thing called, I hope you put D, 1035 exchange. It's not a qualified distribution because they did not withdraw the money, they just make an exchange. It's not a premature distribution because they didn't talk about any age. It's not a rollover. It could sound like it's a rollover, but there's no such thing when you come to annuity to life insurance, because life insurance to an annuity is not a rollover, is what we call an exchange. This is called a 1035 exchange. So if they ask you this question, what allow you to change from your life insurance to an annuity, and that will be your 1035 exchange. Okay, so hopefully this one was not too bad. All right, let me go ahead to the next one. Was the video and with the question, and hopefully you answer. A policy owner fails to pay the premium due to whole life policy. Due into a whole life policy. So this person, the policy owner, so another key thing here, they fail to pay the premium. So you didn't pay your premium, so what's gonna happen? Policy cancel. Just kidding. Policy cancel. I'm just playing with you. After the grace period, so now they mentioned the grace period. Usually this is 30 to 31 days. If you studied the video, you should know the grace period is lasts only for 30 days or 31 days. 30 days for individual policy, 31 days for a group policy. But a policy remain in force. So the keyword, the policy is still in good shape. Now, what provision allowed them? Now, a provision, remember, it's something that's come up with every policy, okay? If you have a provision, it's come up with the policy. Now, is it in contestability? Now, he did not say anything about the person was lying and now they catch him less than 2 years. Now, so this one is not an answer. Assignment is transfer. He didn't talk about the transfer ownership. So that's those two eliminated for sure. Waiver of premium. Did he talk about anything that where the client or the insured become disabled? So D is not correct neither. So you can see the best answer for this one. It's automatic premium loan. So that would be the best answer for this one. Because after the grace period, after the 31 days, if you do have cash value, then this is gonna start automatically. Okay, that's after the grace period. After the grace period, this is what I like doing in the iPad because it's beautiful. After the grace period. All right. So when does the automatic premium loan begin? After the grace period. After they give you 30 days, you didn't pay. So if you have cash value, we're gonna use it to pay your premium for you automatically as a loan, and until there's no more money, no more cash value, and you don't have that, the policy would be lapsed or cancelled or terminated. All right. Hope that ends help you out. I'm gonna continue. Hopefully you have a chance, you pause the video and with the question, answer. All right. After I remind you a couple of times, hopefully you get the habit of doing it, because sooner or later you get used to it. I'm gonna just continue answer the question so we can take the video so it's not too long. Okay, so I don't want to make that video too long. It's about 15 questions I might try to answer here. An employee quit his job. Okay, you quit your job. Good for you. good luck. Hopefully you start a business so you don't have to, keep working for people, or you find a way to make money to get yourself. Okay, you can quit your job and convert his group policy to an individual policy. So you can see there's a conversion privilege. Okay, you can always convert to individual policy, but you're always going to be a whole life, as you know. Convert to a whole life. The premium of that will be based on what? So hopefully you pick the attend age. It's always based on the attend age, not the experience rating. I don't know what that really, that can happen and when they pick him up to charge the underwriting, but this is not the answer. Group weight, but it's based on your attend age. So for example, think of it. If you have a group policy and you start the job at 18 years old, okay, and you work for this company for 40 years, so that you become what? Is that 58 years old? So if you got this policy at 18, it was very cheap, right? And if you're gonna convert at 58, that's expensive. See why? That's expensive right there, because your age, that's 40 years different. It's gonna be based on your attend age. So of course the policy will be very expensive. All right, so hopefully that makes sense. Let's go to the next question. What describes the specific information about policy? The keyword on this question is specific information about a policy. So it's talking about something specific. So for sure it's not the bias guide, because this is talking about something that's general. Okay, it's not producer report. I don't know why they come up with that, but whatever. Illustration have nothing to do with it, because it's illustration, that's the presentation that you do when you sit with the person. So this is the correct answer. It's policy summary. Policy summary. All right, so we're gonna go to the next question. So specific, come to policy summary. Next question. Which concept is associated with exclusion ratio? So now some of you guys probably never see the term exclusion ratio. Hopefully you did post the video and then you answer, right? I trust you on that, okay? Which concept associated with the exclusion ratio? All right. Now, exclusion ratio, you're gonna find it more where? Is it in dividend distribution? No, you're not gonna find it from that. How the exclusion rider affect the insurance premium? No, necessarily, that's not what this is. Policy provision? No, because this is, when you say exclusion ratio, is they talking about annuity, by the way. So it's an annuity where you're gonna find this option. Exclusion ratio, you're gonna find into an annuity. This is gonna determine how you get the payment. Is from the annuity payment, so they can determine which part of it is tax. You're gonna pay taxes. Okay, how much taxes from the amount you receive from your annuity payment. They use the exclusion ratio for that. Okay, so make sure you get that. All right, let's move in along. All of the following, again, some people say they don't like those questions. All of the following, that's mean all of the following information about customer must be used to determine annuity suitability. So that's mean we're talking about annuity suitability. So, but there is one of them not correct. One is not correct. So that's what we're looking for. Do we need the beneficiary age? Absolutely not. But let's read the rest to make sure. If you're doing an annuity for someone, taxation status, tax status. Of course, this is important, very important. So this is correct. We need to know their financial experience. Yes. Do they have any experience about investing, about annuities? Of course, we need to know their annual income, because this is a long term. And annuity is going to become something long term. So that we need to know those information. But who cares about the beneficiary age? That's your problem. Go sit your butt down and wait for your money. That's the way I say it. You sit your butt down, okay? Just wait for your money. We don't care about your age at that point. All right? That was an easy test question. All right, so let's move in along. An insured pays $100 premium. So notice $100 premium, okay? Every month, all right? Every month for his insurance coverage. But yet the insurer, which is the insurance company, promise to pay what? 10,000. Now, here's what I want you to take a look. Do this. 100 is 100 equal 10,000? Not equal. So that's mean the concept you need to understand. So 100 does not equal 10,000. So what is Haitian contract? Take it or leave it. If something goes wrong about the contract, is the insurer fault, not the client, not the insured. Okay. So Haitian, that's not what they're talking about, because this is take it or leave it basis. Either you accept it or you reject it. You accept exactly what I say or you don't. Conditional, well, it doesn't talk about any condition here. Okay. It's not conditional because there's no if in there. Is there any if in there? He said, no, there's a yet. This is not if. Yet. That's a yet. It's not if. Conditional will find an if in that statement. Good health, for sure not. And that's why this answer is correct. Auditory. Exchange of unequal value. So what I pay for is not what I'm going to receive. Okay. Very good test question for you. That was a good one. Next question. Which of the following is true about credit life insurance? Now, this is talking about that, which of the following. That's mean, when they say which of the following, that's mean one of them is true. Okay? One of them is true about credit life insurance. Get that? One of them is true. When they say all of the following, that's mean all of them. 3 of them is good, 1 is not. But they say which of the following is true, 1 of them is the correct answer. 3 of them is bad. Let's check that out. Do you know what the credit life is, by the way? It's when you go get credit and they put insurance on your life. That's what that is. So now if you go borrow people's money, you become a debtor. So it's an annuity. So this is, I don't know why they come up with that. Creditor is the insured. No, that's not true. Not the creditor. The debtor is the insured. Okay. Debtor is policy beneficiary. Oh yeah, you bet. No, the creditor is the beneficiary. No, that's the creditor, or what we call the lender is the policy beneficiary, because you owe the one that you owe them. So they put the policy on you because you owe them money. So therefore, if you die, the creditor get the money back. So, okay, this one about the creditor is the policy owner. Absolutely. Absolutely. I hope you have a chance to bring that. But, and they're also the beneficiary. Okay. Just for give you some more tips. So the creditor is the policy owner and the beneficiary. Guess who paid all the premium? The debtor pay all the premium. Okay, they pay all the premium. Does that make sense? I know I make a lot of choice in here, but if I go ahead, I'll clear some of them so you can see. If I take, maybe I can just say, okay, let me erase this so you can see it clear. Okay, I could say, okay, here. For some of you that say, oh, it's too ugly. Right, so hopefully that makes sense. Just messing up with you guys. Are you still awake? I hope you do. I hope you do. You're still awake. But if you're not awake, guess what? I was going to do this. When you're not awake. All right, hopefully you stay awake. But anyway, let's talk. So which of the following is an approved written document? Okay, is an approved written document that identifies procedures in place to keep the insured information system safe. So to keep the system safe, is this privacy disclosure? No. Is it consumer report? No, that's not what that does. Cyber security, I think pretty much this is that, but let's check the last one. Certificate of coverage, what is that? Why would we put that in here? But anyway, put that to confuse you. So the answer, the correct answer should be cybersecurity policies. Okay. All right, so let's move along. A married couple So retirement annuity pays them $250 per month. So that's, I can see that's a fixed annuity because $250 per month. The husband dies. Okay, somebody passed away. Sorry about that. His wife continued to receive $125. Good for you. Right? Per month, as long as she lives. Wow, look at that. Not bad. When the wife dies, the payments stop. What option? So now they give you a scenario. You have to read between the line. Somebody have an annuity. Both of them, husband and wife, getting $250 per month, but the husband died. Now the wife still receiving money. That's a good feature to have as long as she lives. But the payment will stop when she's passed away. What annuity is this? Is it a joint annuity? No, it's not. Because if it was, the payment was going to stop when the husband passed away, but the payment continue. Cash and refund? No, they did not refund any money. So this is not true because they did not refund anything. It's not straight life because straight life only cover them one person. So, and pretty much it's not because the payment was going to stop. The only thing that would do that is the joint and survivorship. So now you can see, you have a pretty good idea how you can really go take the questions. Once you know, that's the reason I keep urging you guys, make sure you understand why it is the right answer. What's the reason? Because once you know it, you know it. You can do process elimination and you can take like, not that long to answer those test questions, but you got to know, do your part, study. What insurance concept is associated with name? I don't know why I never said this stuff. I'm gonna have to guess this one for you. Okay, which one? Is this policy dividend? No. The reason I kept the other one for a reason. Type of mutual company? No. What's that? Index used by stock company? No, why would they put that? So I think this answer is A. This will talk about guides describing company financial integrity. This is what this really talk about. Okay, the concept that are associated with the name Wish and Fish, it's guide describing company financial integrity. What do you see? My English getting better, right? My English getting better. All right, so let's go ahead. Let's see if we have a few more questions. All of the following are true regarding the guarantee insurability right there. Wow. Guarantee insurability. All. That's mean 3 right. And 3 of them is right, 1 incorrect. I don't know what I'm putting here. Okay, you understand that incorrect. All right. So you see, some people panicking when they see all of the following are true, except those are the easiest question. He's telling you there's 3 of them right, only 1 that's not correct. So let's check that out. But you need to know they're testing you on guarantee insurability right there. Hopefully you read it in chapter 3 in your book. So A said, the insured may purchase additional coverage at their 10th age. Yes, that's correct. B says, the insured may purchase additional insurance up to the amount specified in the policy. That's absolutely true. Yes. C says, it allows the insured to purchase additional amount of insurance without providing insurability only to say that, oh, this is also correct. So as you can see, if you do process elimination on this one, so you can see D is not the right answer. So that's what you should pick, D. You say the rider is available to all insured with that. No, it's not available to everybody. See, all. That's the little thing I want you to get. It's available to everybody. No, it's only available to really to people from 25 to 40, really. So that's mean at 40, it's expired. at 40. Make sense? All right. And the list, this is the last question. Employer contributions made to a qualified plan. That's when they say finish it. Finish the question. Student, finish it. Okay. Employer contribution made are subject to vesting requirement, qualified plan. Yeah, absolutely. Because they qualified plan. There is vesting requirement. Vesting simply saying when you take the matching contribution, when the company put that for you, when you take their money, pretty much. When should you take their money? Sometimes they give you an amount of years, 1, 2, 3, 5, or maybe it could be all the way to 7 years. That's called vesting requirement, when you can take the matching contribution in your employer plan. So maybe discriminate in favor. So for sure not. You can't discriminate in qualified plan. Remember? After tax contribution, but this is a qualified plan. It's before tax, not after. It's before tax. So that's not an instrument. So are taxed annually. So this, I don't know why they come up. No, it's tax deferred. Okay, it's deferred. Hopefully deferred is 2F, I don't know. It's deferred later. No, you pay taxes, what we call later. So therefore the correct answer in this one will be A. It'll be A. So now, as you guys can see, so when you come into that exam, folks, it's just you have to focus and know what they're asking you to do. So that's the whole challenge about this exam. So they try to trick you on the exam, but you have to be able to trick them back. Hopefully they step you out, and I see you guys at the top because the bottom is too crowded. Good luck.